I think China's got much bigger problems than people think they do. And it's really based on their banking system.
Gentlemen, there is so much China news these days. I have to admit, I am just foggy about all this stuff. You got an average age in China's workforce of 40. Labor costs are going up for production and manufacturing. Birth rate is low, so their workforce may not be sustainable. There's inflation, there's deflation. Clear that all up for me, Joe. You're the
Yeah,
master here.
I really can't clear all that up. There's a lot of moving parts there. Uh, look, really back off and look at really big picture stuff here. And there's really, there's I think kind of uh, well, I was going to say there's a struggle for global dominance here, in the geopolitical sense between the United States and China, but I don't know if that's exactly true. It seems like that certainly it's not, well, it's not, first of all, it's not just the US, it's Europe too. Look, China's trying to export their way out of a deflation problem, and the deflation problem comes from building a lot of housing they didn't need, uh, and lending a lot of money to do so. So their banks are in trouble. Nobody wants to borrow. Nobody can borrow. They got excess housing, so housing prices are falling, and housing is where most Chinese people park their savings in housing, so to speak. So that's having an impact on savings, which has an impact on consumption. What would be nice for the world is if China's internal consumption picked up, but it can't do that. So what does all that mean? I don't know, man. I've said a long time that China's the new Japan. That Japan did basically the same thing that China's doing now. And it's really not that much different. Japan came along in the 70s and 80s and suddenly entered the global trading system in a big way. Not so much because they forced their way in. They didn't. WTO wasn't around back then, but we allowed them in, and I think there was a good reason for that. If you go back to the 1970s, automobile industry in the United States, for instance, was a mess. They needed competition. They needed somebody to make them step their game up, and Japan came along and did that. I remember my stepmother bought a Toyota Corona, not a Corolla, a Corona in like 1972. And we were, man, living here in a little southern town in South Carolina. People looked at you askance, man. What are you doing driving that thing? Of course, our other car was a Volvo, so we were really way out there. But anyway, anyway, the point is that they did this. They manufactured, and remember there were all these books in the 80s about Japan's taking over the world and they're going to surpass us and all these things. And the bottom line is it didn't happen because they blew a big bubble with our help, by the way, which is a very interesting side story, but I won't go there. Suffice it to say that manipulation of currencies has an impact. And we manipulated Japan into a giant bubble in the late 80s. They didn't need our help, but we gave it to them anyway. So, but their bubble was primarily in real estate, which is exactly where China's was. There was a point there where I think the portions of Tokyo were worth more than all the real estate in California or something like that. It's just crazy. And it took them now, I guess, 3 decades to get past that because they weren't willing to recognize the losses. That's where the similarity really comes into play here. The Japanese banks were allowed to carry all these bad loans on the books for decades. And it wasn't just real estate, it was also other companies. And Japanese companies hoarded cash because they became afraid that they wouldn't be able to borrow. And it just fed on itself. And it took them 3 decades to get past that. And I'm not sure they're actually past it now. We are starting to finally see interest rates go up there. So maybe it's passed, but I don't know that I bet on it. But all the same things. Demographically, they're very similar. The Japanese population did and workforce peaked and started to fall. Both of them are have an antipathy to immigration, so they weren't able to fix the problem with that. And China's in the same boat. Now they've got this giant real estate debt. They've got a bunch of banks that have bad loans. They won't recognize them. And because they won't recognize them, they got to hold them. And since they're holding these bad loans, they don't really lend. And as I said, there's a lack of demand for lending too, because nobody needs a house. Everybody's got a couple, maybe three. So it's kind of a mess. It's interesting though that Chinese stocks have performed pretty well over the last year, and I read a few things recently saying, "Hey, this is over with," and I'm like, "Yeah, I don't think so." Will it take 3 decades? I don't know that the Chinese have that kind of patience to do that, but maybe they do. We'll see. I don't know how to handicap this, put it that way. I know that the United States and China are at odds on a number of things, although we just saw yesterday that President Trump is going to allow some AI chips from NVIDIA to be sold there. So I don't know. I don't know how to handicap this. I don't know what it means actually. I do know that there are a lot of countries around the world, particularly in Europe and obviously the United States, who are fed up with China dumping product in their country. And so there's that pushback. And if China can't export their way out of this, then I think it lasts a long time. And I suspect they're not going to be able to because other countries are going, "Yeah, hey, Europe is saying, hey, you know what? You can't send all these cheap cars here. We got an automobile industry we got to protect. And the United States is doing similar things. So that's the world we live in these days. It's not necessarily the best one, but it would be nice if China, how do I put this? We could live in a world of free trade if China would join us and not do things that harm other countries. So um, right now, that's not the world we live in, though. So we'll see how this comes out.
Steve, what's your opinion when we're looking at all of we're juggling all these balls in the air with China? You agree with Joe, or are you going in a different direction?
Geez, I always have the same answer for you, Bob, of kind of like D all the above. We should probably do a separate video just kind of locking down on the China because the saying that history rhymes, it doesn't repeat. I definitely see where it's rhyming with Japan. 100% on board with Joe there. Where it's not repeating, there's important differences. There's a historical friction in China between the coastal areas and the poor inland areas that has traditionally led to an implosion. Japan wasn't doing like the biggest post-World War II military buildup, and antagonizing with territorial claims pretty much every neighbor it has at the time. There was a lot of frictions the Chinese are putting in the system. You also didn't have an imbalance of something like 20 million males, which is always destabilizing to a society because you basically had a population control measures from the state that encouraged forced abortions, infanticide, and other things. And when you have that many unmarried males, it usually results in civil war or higher crime rates. And maybe China will be able to tamp that down with authoritarian measures. But I would say there's some interesting divergences there, along with all the similarities that Joe is 100% on. Enough to have an entirely different, interesting conversation. On the topic of inflation or deflation, I thought the thesis Joe came up with a while ago, explaining why aging populations globally are an inflationary force is right on the mark. And China is an example of that, where you've seen higher labor cost going up. And in a country that produces almost like a third of the world's manufacturing goods, higher labor costs are going to have some sort of inflationary impact. And one other difference too, I'd say meaningful between China and Japan is Japan did work its way up to the value chain of being really a technology enabler, of not being primarily focused on manufacturing. They actually outsource a lot of their manufacture right to the US with transplants and stuff. China's still very dependent on building stuff. And because of the Communist Party, probably has a desire not to have an empowered middle class. They like having kind of a more of a manufacturing lower class. It's a little easier in their minds, maybe to control, I think. Anyhow, all that aside, um, I think the inflation deflation case here is interesting because if you look at the thesis Joe came up with, explaining that as people get older, the view folks had, partly based on Japan, that they would consume less, actually isn't how the numbers actually work out. Um, So you do actually end up having higher labor costs, but not lower demand based on the demographic trends. And then what's interesting here with China is you do, on the backdrop of that inflationary trend, have some deflationary trends, right? Because like Joe alluded to, they built way too much housing, probably like twice what they need, or more so than that. Also in kind of higher end than they actually need for their population. Um, and then the excess production capacity. I mean, they are trying to sell goods below cost, so that should be a deflationary impulse, right? But I think what's interesting that we're seeing how that works out is the inflationary is carrying through, but the deflationary isn't, and it's encouraging not just in the U.S. but around the world tariff walls and trade restrictions. So they're not being able. The very fact that they're trying to dump goods has actually created more trade barriers and more trade walls, and is driving the production price of goods up more with more tariffs and whatnot. So I think you could have gone into this and said, hey, maybe they'll counter each other, or maybe it'll be more deflationary because they have so much, goods that they want to produce below cost and sell below cost. That it's going to be a deflationary wave that impacts the rest of the world. But what we've seen is that hasn't happened. What it's kind of resulted in is other countries putting up tariff and trade walls. And that's actually, I think, actually going to be long term an inflationary force also on a global basis. So within China, I think you're going to continue to see it, maybe even more deflationary than inflationary forces. But I think the global impact and the impact on global markets is looking decidedly inflationary going forward.
Joe, given all that information, China may not be a toothless tiger, but are they as big a threat as we've been to the United States, as we've been led to believe?
Oh wow, that's a nearly impossible question to answer. I would just say it this way. I think China has a lot more problems than people perceive. I think their problems are internal, that are they're economic, and they're also political. And I don't know how they're going to get resolved. Whether that's bad for the United States and the rest of the Western world, I really don't. I can't say, because we don't know what form that's going to take. If you have a revolution in China that brings a more more freedom to Chinese people, then it might be a positive. I don't know. I would just think that you can't handicap this stuff in advance. Like I said, I think China's got much bigger problems than people think they do, and it's really based on their banking system, and really their reliance on exports. And now they've basically ticked off the whole world. And by the way, the inflation versus deflation argument that I've made, part of it is demographic, but part of it is also geopolitical. In that, and think about it this way: if globalization caused a drop in the price of goods, which it most certainly did, then deglobalization is going to do the opposite. If you fracture supply chains, things become more expensive. They become more expensive to the company that produces them, no matter where they're producing them. And then you've got all these trade barriers to navigate in addition to that. So I do think the outcome is inflationary, but China's a strange case. It may not be inflationary in China. They have this excess goods problem and this banking problem where they could end up with a deflationary bust. That doesn't mean it's going to transmit to the rest of the world, though, and that's part of what's going on with putting up all these barriers between countries. That maybe, in a sense, may contain things. I don't know. Again, I really can't. There's no way. I don't think anybody can really predict how that's all going to come out. I think too, it's interesting. What is Xi Jinping? How long is he going to last? He's not a young man, and who's his replacement? And when does that happen? Those are questions we really don't have an answer to, and that could be really important too. Look, I think people spend way too much time thinking about China. I think that we really ought to be focused on the U.S. economy, and yeah, China affects that, but not nearly as much as people think it does. So we'll see how China does. I'll put it this way. I will say this: we don't have any investments in China. There may be a place for that at some point. I don't think it's right now. So,
All right, thank you, gentlemen. And as we all know, investing is a global issue. And we would love to talk to you about your portfolio in that regard. You can start that conversation with us at info@alhambrapartners.com.